wondering what to do with FTX exchange, Sam Bankman-Fried decided to leave its company and face the problems, but out of the ship. The only one element that is wondering right now the whole crypto sector is what the real consequence of that issue might be. We are really aware of the possibility of cascading effect that bankruptcy of FTX may entail with. What and who might be the next? Today I'm presenting you another episode of Blockrevision. We are talking about crypto indexes, about trading ideas, and everything you need to know right now. Thank you for tuning in, and let's get into it. And traditionally, we are starting from economy view. At first, if you wanna pose a question, you have right here at the bottom a window and a chat inside of which you may ask such questions, and I will get to them as soon as possible. Getting back to today's broadcast, we are starting over with T-notes that are reversing. After touching a level not seen since the 1980s, the Fed when the Fed started to aggressively tightening, we are right now looking like reversing a tendency. Curve inversions, however, for those that are betting on bonds, are a good sign, but definitely not for the economy. Curve inversions have a track record of preceding economic downturns. Whenever those curves are reverting in a very strong manner, the likelihood of bringing much more doom on the economy increases. So it looks like we are betting in favor of reverse. Right here, after this Thursday's very strong green candle, we may find that this time has finally come. For this one, as a kind of justification, let's have a look at the charts of T-notes straight from a live perspective. So on Thursday we had that candle on a weekly chart. We are finding a bottom out of this 2006 highs that's supposed to get maintained for longer, especially with such of a reaction being found right here. Right now, let's talk over what does it mean for the Fed. For the Fed, that might be a catalyst to eventually put his foot of the metal, and making it even in terms of vehicle. In order to slow down the vehicle, the economy vehicle, we need to definitely decrease the pace of hiking interest rates. We need to, however, bear in mind that the Fed told in the summer and right in the early fall that the job market is still overheated. That's why we still have some elements that still indicate for further hikes. So the market is right now betting on the slowing down that pace, but they will increase definitely for longer. Right now, let's get to market outlook and starting with optimism, right over we are at the greed phase that CNN, this gauge, is pointing us about, and usually during that phases of the market where this optimism is that big during this bear tendencies, it's more I would say more likely that will achieve a positive results out of the selling the strengths instead of reverse. So those valuations for many of the traders might be very attractive. That's why we are buying, and this buying power is seen on the markets. But we still haven't justified that we have rebounds to that extent that will get us out of this bear market. In terms of probability rate, it's more that's the bigger odd that this bear market that already started will persist for longer. If we just set the starting point at the June, when we have crossed this 20% of decrease in terms of major US indexes, we'll still have this bear market throughout over a year. So for me, this reaction is over exaggerated, and that's why it would be, for me, even if those third quarter earnings are not that bad, it's better to sell on optimism rather than buy it. So looking at the rear view mirror, economy hasn't gone that bad yet, but that's demand restructuring, demand collapse is still possibly on the way, and those perturbations with laying off has to some extent already started. Let's get straight to crypto outlook, and FTX finally files for bankruptcy. So that's the meltdown that shows how this guy era is over. He was the richest guy below 30, but as the history shows, that type of quick Hollywood type of the career ends badly very fast. So Bankman-Fried bankrolled the Democratic Party's midterms war chest to the sum of $40 million using funds from his bankrupt crypto exchange. This is the story that we can name a few, to say at least. Many elements have been funded by its bankrupt elements, and what the SEC will do with this. They have a very hard nut to crack. That's why I think this cascade moment of falling apart of a crypto industry is already commenced, and it may bring down the valuations for Ethereum and Bitcoin even lower. In order to reduce further cascading negative effects of FTX, Binance is forming an industry recovery fund. That's a very, I would say, a very difficult upheaval. So those, as I would just mention, these elements that pose of a strength of different startups, those elements should be constructed at first. They shouldn't be prone to liquidity crisis. So this is very difficult to qualify which projects Binance is supposed to help. If we assume that many companies in the crypto industry is literally based, its strength is based on the very, I would say, easy money, that would mean that just a few of the crypto projects may persist this difficult period in time. So those projects that we want to rescue, what Binance is, why the Binance is forming an industry recovery fund, should be resilient at first, and right now helping out those problematic structures may get only a bigger trouble for the industry. So it's better to let them collapse rather than rescue and make the problems to persist for longer, in my opinion, at first. New extreme of inversion for Bitcoin soon. That's the question that I have posed. So recession shock might for the cryptocurrency yet to occur, but if we just draw a line that are going throughout the highest highs after the climax of the current cycle, of the particular cycle, we may find that this bear trend has been ended up with consolidation period. Crossing through this line has usually meant we are getting out of this consolidation, and we are starting over the new cycle. So if we just track this line and assume that Bitcoin may stop at around 13,000 K, that is where the strongest support really is, we may have found there will be around few months of consolidation, and we'll get out of this consolidation somewhere on the brink of first and second half of 2023. On the other hand, Bitcoin has dropped during previous cycle throughout around the year, and this time we are already over with 370 days. But this time might be a little different, as we have this macro problems that yet to get seemed, that made these problems on the cryptocurrency reliant to those doom loops, reliant to this doom loops get much longer. But I would say that this bear cycle should get over next few weeks. So the FTX problems might be this clearing the industry process that will stop this cascading effect for good. So we are after this Luna domino. Right now there's FTX domino, and afterwards there will be a great opportunity for many buyers to eventually enter the market. In terms of market movers, let's jump to sorry, not this one, but this. So let's jump to trading calendar. Let's have it. Yes, that's right here. We right now at the beginning of the next week, on Monday, We have RBA meeting minutes and Japan's GDP growth rate yet to get through. On Tuesday we have economic sentiment out of the Germany, and we'll find out whether it finally recover. Regarding the recent rebound on the market, that should tweak at least a little. PPIs out of the US, this is also very important to look through, as recently we've been talking that this PPI has a kind of a possibility of getting us back to this positive area, and that's why I think this gauge will be important in terms of verifying in which of the market phase we are, whether we are contracting or eventually recovering out of this downgrade moment. Right over that's economic calendar once again. Wednesday we have retail sales out of the US, inflation rate out of the Canada. That's also very interesting, and some Fed's member speeches yet to get through. And on Thursday, that's very important, the housing market eventually is coming with a new portion of data. United States building permits right now has been slumped, but the market haven't said the last word that we are expecting very carefully another ratings. NHB housing market index. In order to have the market to rebound, we need this lagging indicator to eventually show some sign of strength. Otherwise, that will be a disastrous for the rest of the ratings and for the economy as a whole. On Friday, we have some data of the Great Britain and US, but it's not of a high importance. So we don't have a very I would say packed with important news week, but there are some of the events that definitely are noteworthy, and that might become a litmus for the litmus paper for the Fed's decision in December. Sorry. So as the last point, I will get you straight to trade idea section, and on trade idea I do have for you a crude oil that's right here. So we have formed on a daily structure a type of a that's the kind of a cup and handle formation without a handle for now, as we have broke down the structure that were calling for bulls to come to the market. Right now, the bears has turned up and decided about the sell off. After breaking the market structure, we are forming kind of a rebound. That after this building the RSI around 50 area on a 4 hour time interval, after this weeks from the upside been formed, we are forming a correction out of this one, and this correction should bring us down at least to this lows, as though this one has been previously tested. So I would put it like that. USD WTI is at first going to test out these lows, and afterwards we would have another possible rebound out of this area. And if we just manage to draw a trading board that will be like here we are right now. Like this, let's set it so that the sell stop set above recent highs, and this target for the trade will be right here. Risk reward ratio at 3.3. Right now we are forming a breaking out of the of this recently formed market structure. In terms of positioning, if you'd like to know the fundamentals, technical fundamentals in terms of positioning, commercials recently started to sell off the crude after recent rebound been formed. That's very weak, but it's also not to omit for now. In terms of US ending stocks for crude oil, that may revert, but we don't find this reversal to happen in the any time soon. At least for now, we cannot find any type of signs of rebuilding those stocks by US. That's why this price should be dragged down with inflationary pressure, also yet to get eased. So in today's episode, that's everything. Thank you very much for watching, and as always, I invite you for the episode tomorrow. Thank you and